The SBA just increased the EIDL loan from 6 months of working capital with a cap of $150,000 to 24 months of working capital with a cap of $500,000. And in my other videos, I talk about the process with the email and everything. But in this video, I wanted to talk about what exactly working capital means. So that's great that they upped the amount from 6 months to 24 months of working capital and 150 to 500. But what does working capital even account for? How do you figure out what your working capital is? Well, the basic formula for working capital is current assets minus current liabilities. The things that would fall into the category of current assets would be things as simple as cash, accounts receivable, and possibly inventory. Things that would fall into the current liabilities category would be things such as accounts payable, people you owe, and short-term financial obligations such as credit cards. So the way the formula works for working capital is you take all of your current assets minus all of your current liabilities. That is your base number for working capital. Multiply that times 6 months for the first round, or multiply it by 24 months for the second round. It's a pretty simple formula, but I know what you're thinking. What if I don't have any of those current asset categories? What if I only have cash? Or what if I don't have any current liabilities? Well, if you don't have any current liabilities and all you have is assets, then that's technically your working capital. So round numbers, let's say you make $10,000 in your business. That flows into your business bank account as cash. So in your bank account sits $10,000 in cash. You may have credit card purchases such as fuel for the month or other expenses, maintenance, repairs, things that you put on a credit card. You would take that $10,000, subtract all of those credit card debt that you would pay back, and that would be your working capital. Multiply that by 6 months, and there you go. Or 24 months in this case in the plan. That is the amount that you would request from the SBA. They're going to go through your financials and make sure that you qualify for that amount. So there's really no way of gaming the system. You're going to have to provide your P&L or your bank account showing what money flew in and what money flew out. The difference between those two will be your working capital. Now, how scrutinous they're going to be on this, I know for the first round of EIDL, they basically just took a stated application and this is what your cost of goods sold was, this is what your income was, all those things to calculate your working capital. On the reconsideration phase, they actually took into account the 2019 taxes and your current P&L statement. So they were looking at the numbers more in depth. Now I'm going to give an example of a trucking company, near and dear to my heart, but here's how I would figure out our working capital. I would take what our brokerage pays us, and this will work for any trucking company that gets paid by either a broker or independently by companies. However, if that money flows in, then I have to take out fuel because we use fuel cards. So you subtract all of your fuel that you're going to pay on those fuel cards because typically they pay off every 30 days. You're going to subtract insurance payments. So insurance that you have to pay monthly, things like that. And those would be all of your short-term liabilities. Your truck payment wouldn't really count in there because that's a long-term asset. Your accounts payable, so if you have employees that you have to pay, that would be considered a expense that you could take into consideration into the formula. So I hope this helps you out with your working capital formula, and I hope that you get the maximum amount of loan that your business is eligible for to help you get on the right foot. I wish you the best in your business, and until next time, have a great day.